US stocks and the US dollar are down again on nerves about tech earnings. China exempts some US imports from tariffs, but a wider deal is unlikely. And ANZ Research changes its Bank of Japan call to no hike this week from a hike. That's coming up in our 5 Things in 5 Minutes on Tuesday, April the 29th. And then in our bonus deep dive interview, ANZ Economist Krystal Tan reviews how South Korea's political turmoil put its economy on the back foot before the April 2nd tariff shock.
The economy is basically starting on a weak footing even before the bulk of US tariffs hit. And if we look at high-frequency data, exports in the first 20 days of April, those fell 5.2% year-on-year.
But first, in 5 and 5 with ANZ. US stocks are down around 1% this morning as uncertainty about Donald Trump's tariff shock and tech earnings drag on sentiment. There has been some positive news in recent days, though, including moves by China to match exemptions by the United States from tariffs. Here's ANZ China economist Vicky Xiaozhou to explain.
China has waived its retaliatory 125% tariff on certain advanced semiconductors and is also considering suspending tariffs on medical equipment, some industrial chemicals, and aircraft lease. This move mirrors Trump's tariff exemptions on smartphones and other electronics, showing that both US and China are taking a more programmatic approach to alleviate economic cost.
As of 4 a.m. Sydney-Melbourne time, the US dollar was down 0.4%. The Aussie dollar up 0.5% at 64.23 US cents. The Kiwi was up 0.2% at 59.66 US cents. Gold was up 1.5% at $3,348 US an ounce, while West Texas Intermediate futures fell 1.8% to $61.87 US a barrel. Number 2. Vicky says the chances of a full deal between the United States and China anytime soon are remote for now.
We were likely to see China announce the tariff exemptions on certain industries for practical reasons and continue open to talk. But it is unlikely that China will fully drop its 125% tariff unless the US drop its 145% tariff on China. So far, China said there's no negotiation between the US, and we haven't seen any serious negotiation process between US and China. A trade deal seems still remote.
Number 3. Vicky says China's government has been planning to help its exporters through a tough period for a while and seems set to hunker down.
But what stood out is China will rebate unemployment insurance to tariffed enterprise, showing employment stability takes priority. However, China has sent a common message to the market but kept its policy flexibility to prepare future tension with the US.
Number 4. ANZ Research has changed its view on the Bank of Japan's next move because of all this tariff uncertainty. ANZ senior international economist Tom Kenny says the Bank of Japan was expected to hike this week, but he now sees it waiting.
Previously, we had expected the Bank of Japan to hike by 25 basis points at this meeting, based on a pretty strong underlying inflation pulse currently, particularly in services inflation. Although underlying pressures would justify a hike at this meeting, we think the Bank of Japan is right to be cautious and keep its hand steady this week. Indeed, financial market volatility has been elevated in the wake of the higher than expected reciprocal tariffs that were announced by President Trump on the 2nd of April.
Number 5. Tom sees the Bank of Japan waiting until October now before hiking.
In the next few months, we anticipate policy uncertainty, particularly trade policy, will remain high until there is a resolution to the reciprocal tariffs. This suggests the Bank of Japan will be keeping rates steady for a while longer. We anticipate by October the Bank of Japan will be in position to tighten policy by 25 basis points on the assumption that underlying wage growth in the economy continues to remain firm.
Tom Kenny there. Now, in our bonus deep dive interview, my colleague Alex Tarrant spoke to ANZ economist Krystal Tan about South Korea's economy and its ability to weather the US tariff storm after its GDP contracted in the first quarter of the year.
We do expect fiscal stimulus to step up. The caretaker government has already announced a supplementary budget that's worth about 0.5% of GDP. The presidential election will be held on the 3rd of June, and post that, we should expect further fiscal stimulus, especially if the opposition party emerges victorious.
I guess then we've also got now the tariff announcements, which happened at the start of Q2. So what does this say about South Korea's ability to navigate these sort of current uncertain global waters?
Yeah, so now the economy is basically starting on a weak footing even before the bulk of US tariffs hit, right? And if we look at high frequency data, exports in the first 20 days of April, those fell 5.2% year on year, right? The effects of US tariffs have started to filter through. If we look at the breakdown, semiconductors, that was the only export category that recorded positive growth. And these exports are currently exempted from US tariffs. If you look at the other sectors that have been more severely impacted, autos, that faced a 25% US tariff rate since 3rd of April, that's down 6.5%. Steel, the tariffs that came in place earlier in March, that's down almost 9% year on year. So, if we look at the export data by destination, it's quite telling. Exports to the US are down 14% year on year.
You mentioned the supplementary budget and the elections. Will this contribute to ongoing political uncertainty for at least another few weeks, and therefore mean that the Q2 data might also be subdued?
I think the Constitutional Court's decision to impeach the former president has at least removed a major source of political uncertainty. Recent surveys started to show that, business sentiment, consumer sentiment is starting to improve. They're off their lows, although still weak.
And then when it comes to the central bank, how will they be viewing this data? How did it compare to what they were expecting to see? And what do you think this means for rates in South Korea?
Yeah, so the Bank of Korea, at its meeting earlier this month, they opted to pause, but it did flag that, growth in Q1 was likely to be weak. And now that we've seen the actual data, a May cut is definitely now on the cards. Look further out, I think we can expect further easing. I think Q3, we should expect at least another 25 basis point cut. And it's very difficult to rule out even more easing thereafter. A lot will also depend on whether US tariffs are hiked further, and if the domestic fiscal stimulus that we're expecting, whether that falls short of expectations.
Are there any green shoots for the economy? I mean, you mentioned the fiscal stimulus, but are there any other sort of green shoots on the horizon that could show that this is the bottom and things might get better from here?
Well, I think for more domestic-oriented activity, now that there's a bit more certainty on what's happening on the political front, the election does provide an opportunity for political stability to return. So hopefully that would at least help continue to nurture the gradual improvement in sentiment. But policy is going to be a very crucial part of this picture. We do need to see a strong policy response to put a floor to sentiment to help drive growth going forward. Now, on the tariff front, I think there are reasons to think that South Korea has good odds of negotiating a trade deal with the US, but the reality is, US trade policies are still very much in significant flux, right? So, it's unclear if sectorial tariffs on semiconductors will come true. It's unclear if maybe now they're starting to see some talks about potential de-escalation in US-China trade tensions. That would be very helpful for Korea because Korea is very much plugged into the global supply chains as well.
Krystal Tan there talking to Alex Tarrant. I'm Bernard Hickey. That was 5 and 5 with ANZ for Tuesday, April the 29th. Catch you tomorrow with a look ahead to Australia's first quarter inflation data. This podcast contains general information only, not investment advice. You should obtain advice for your personal circumstances before making any investment decisions. Please view the podcast disclaimer available via your media player or email.